traders, welcome to your daily market update for a new week of Monday, the 11th of May 2015. And let's have a quick recap of what happened last week. We had non-farm payrolls come out quite mixed. We had flat payroll number, unemployment rate dropped, which was good, but hourly earnings were softer. So the US dollar was pretty much remaining within a range-bound motion. So the market will have to turn to this week's retail sales figure. It's really the only major data print coming out for the US dollar. And the market will turn to Europe this week. And I'll get to that in a minute. But also last week, we've seen the surprise victory of David Cameron. He led a broad-based gains, which is the first time that's happened for the Conservative Party since 1992. And with such a large majority win, there is seen to be continuity in the market, which results in less risk. And as a result, the Great British Pound is rallying. It's not all perfect, as we are seeing protests go on over there, as Cameron was campaigning as to holding a EU referendum. So we'll see how that plays out in coming months, but I don't think that's going to be affecting the market in the short term. For now, the Great British Pound should predominantly be quite firm, but we do have some data coming out this week, including the quarterly inflation report, and that will be a good indicator as to the future growth forecast for the UK economy and the interest rate hike outlook. And we'll also have the employment report, which could affect the currency pair as well. And technically speaking, we have testing a major resistance level, which was rejected on Friday. And it will be interesting. We need to get a break above that to see further gains. Otherwise, we could be having either a triple top, or we may have a cup and handle formation, which I'll show you on the charts. The Canadian dollar seen employment data which was mixed. Jobs were lost, but they were mainly in the part-time area, not the full-time area. So that was a bit of a plus. Plus, we also have oil still trading at some pretty high levels compared to what we've seen in recent months anyway. So that's a positive outlook. And I think overall the Canadian dollar bull story is still intact, and we'll see how it will play out. But for now, we will have a look at the charts, and I'll tell you what I think of the US dollar versus the CAD. I think the US dollar will dominate it for the time being. In New Zealand and Australia, we did have some Chinese data over the weekend, and it was very weak CPI, and I think that's going to continue to remain offering pressure for the Australian dollar and the New Zealand. And we also see New Zealand come out, and you can see here with weak retail sales figures as well, especially the electronic card sales for the month-on-month of April. That was very poor, and as a result, on the open of today's session, you can see the New Zealand dollar dropping quite rapidly. So between the Australian and New Zealand economies, I think the pressure is going to remain there. Now, the US dollar, that's the hourly chart, and you can see here that we did have some pullbacks in the non-farm payrolls. We were still range-bound as a result, but open of Monday, we are seeing the US dollar become a little bit positive again, and resistance still remains up here at 95. If I quickly take you to the daily chart, as that's really what's pointing out, we do have, I apologise, we do have a major resistance level, as I mentioned here, at basically 96, and it's going to be interesting to see whether that holds up or whether we see the downtrend line actually continue to control the US dollar for the foreseeable future. Let's have a look at the charts, and you can see here on the New Zealand dollar, the rising wedge pattern has been broken out last week, and we will continue to see falls. Even though we did have a little bit of a bounce last week, the falls should continue as a result of the weak retail sales figures, and I do expect we will test 93 cents at some point, the next support level, and then of course the bottom range of the rising wedge could possibly get tested as well around 72 cents. So we'll keep an eye out for that, but I think pressures are going to remain. Likewise with the Australian dollar, we have seen a quick burst rally here with the confusion of the RBA's interest rate cut, but then we've seen the comments be quite neutral. And then since then we've had Glenn Stevens confirm to the market that they haven't moved to a neutral stance, and they could still see further cuts on the table. And I think that's going to add continue to add pressure for the Australian dollar, and we could move back down into this area. As you can see in the past, this has been a range-bound price action from 79 cents down to 75 cents, and I think we'll move back down into that area. And we'll have to wait and see how things play out for the Australian economy, especially as we move closer to the US economy raising rates, which will only add further pressure to the Australian dollar. And if we get a break of 75 cents, I think that'll open up some further lows. As you can see here on a weekly chart, I've had some pretty big falls, and we are in the cusp of, you could say, just a minor retracement. I think it's a short-term retracement before we actually move lower, as the Australian economy, I think, will continue to diverge away from the US. So we'll keep that in mind and continue to monitor the price action. But for now, I think that those selling the Australian dollar will be beneficial. Now, the Great British Pound, as I've mentioned, we were talking about the weekly chart last week, and we have discussed that the moving average, 34 moving average, has been resistance, and we've seen resistance here at $1.55. We've tested it, and I think we could reject it. If we go to a daily chart, you will see that I will get rid of this indicator now. You'll see that we have hit resistance, and it's been resistance in the past, and it also was a Fibonacci resistance level on the back of a weekly chart fib. So we really need a break above this if we're going to see higher prices. So for now, it's offering resistance. Could this be a triple top, or are we looking for the cup, and then we're now looking at producing a handle pattern? It's probably a little bit clearer on a 4-hourly chart. If you have a look here, we potentially have a cup, and we could be coming back to form the handle before we actually make a run and break through it. For now, the jury's out, but it's something to keep in mind for trading throughout this week, as we do have some data coming out that will be of interest, especially quarterly inflation. The euro is under pressure, and I believe it's coming down to test this moving average once again, the 100-day and the $1.10 support level, which in the past has been very strong resistance, and it could offer support. We are in a consolidation phase, I think, for the euro. While ever we're trading around this area, and we really need to configure some direction before we try to determine any long-term trends. But for now, support remains from $1.11 down to $1.10, support in this area, and we're going to have to see some price action really break those levels before I'm convinced of going short on this just yet. We also need to keep an eye on the US dollar and that major resistance level to see whether it ties in with being correlated with the euro testing this area here. So we'll keep an eye on that into the future. The US dollar versus the Canadian dollar, I have got it on the weekly chart because I was talking and posted tweets about a tweezer bottom potential right here off the Fibonacci 61.8 and the $1.20 level. And I think that for now is going to hold, and we could see a run up to the $1.23 region as the week rolls out. So we'll have to keep an eye out. For now, major support is at the base of those tweezer tops. And if we have a look on the daily, we have kickstarted this week with a strong US dollar, and we'll have to see what happens if we move up into this $1.23, which is the next major resistance level. The US dollar versus the Japanese yen is still range bound, as you can see. We haven't broken out of that as a result of the non-farm payrolls, and for now we are still potentially looking at the range continuing this week as we do not have any major data. Well, that's it from me today. Keep an eye out for any news that is associated with the euro, because today we will start to see discussions about Greece, and we expect no deal to happen tonight, and tonight actually to be a fairly quiet trading session. However, Tuesday we do expect Greece to make a massive payment to the IMF and the ECB as a result of their loans. However, that may or may not happen, and as a result we will get price action associated with that with the euro. And of course they may be also granted another extension. So keep an eye on the news wires, as the next 2 days Greece will be in focus, and we could see some turbulent times for the euro. So definitely take note of the major support and resistance levels, and if we see a break of that on the back of some pretty worrying information about Greece defaulting, well then we could be looking at the tides turning and the euro being sold off heavily once again. Well, that's it from me today, and until tomorrow, trade well.